I'm Corbett Wall with DV Auction, here with your feeder flash for Wednesday, May the 8th, brought to you in part by Cargill Fescue EMT. Tall fescue, a dream to grow, but for cattle it can be a nightmare. Fescue EMT is a new mineral defense with end-of-fight management technology, research proven and backed by the expertise of Cargill Animal Nutrition. It's uniquely designed to help defend cattle against the challenges of grazing end-of-fight infected fescue while improving growth and overall performance. Make sure your cattle are prepared for the threat. Learn more at fescueemt.com. Really the best fat cattle trade of the year in this sour market. It's hard to believe, but essentially that's what we saw. Everything's about the basis. You remember several visits ago I told you it was all about that basis, and we needed to set music to that and make a song if somebody already hasn't, but that's all that matters is the basis. And you can understand that's the nature of the beast these days. You buy some feeder cattle that you think get close to hedging. You hedge those cattle, and when it gets there, that you hope there's a disparage between the cash and the futures price, and that's most of your profit right there as far as if your cash is higher than what the board is. If not, you threaten to deliver the cattle and you straighten it up that way. But and then if you can make some economies of scale or have some outstanding performance like those green grass yearlings will have that come off in the summer and in the early fall, then you can maybe pick up a little bit of money there. But everybody's just all about the basis, but they seem not to even care about market position at all. So as long as they're working with that basis and they end up with some money to put in their pocket, everything's fine until they paint themselves in a corner to where they get to where there's no market position at all. And then that's what we're headed towards. We're going to get these fats so cheap if we keep doing it like this that you'll get to the point where you can't hedge any of these feeder cattle. Well, then your feeder cattle prices are going to drop, and then that gets tough on your backgrounders and grazers, and then they're not going to be able to give as much for their calves, and then that's going to make it tough on the cow-calf man, and it just kind of rolls downhill like they always say. But we'll talk about that when we get to the fat trade that happened on Tuesday. But look at the board on Tuesday. June live cattle futures unchanged at 112.27. August up 67 cents at 109.07. If you remember on our last visit, we talked about how things have been down so hard, but the way that the board, the cattle board reacted on Monday, being down really sharp early in the session and working its way back up, made everybody think, and it ended up happening that way, that there might be a little bounce in the board, and there was on Tuesday. But I wouldn't get that confused with this market's going to turn around and start coming back anytime soon. May feeder cattle up $1.27 at 137.30. August up $1.25 at 145.60. Your fat cattle trade lower again, but like I said, it is the best trade of the year for some people, but lower again. But you talk about the Southern Plains, about 3,500 were confirmed in Texas and 10,000 in Kansas. That means there was a whole lot more of them than that, but Tuesday they already had those confirmed at $1.20. That's $3 lower. We were $1.23 last week and $1.26 the week before that, if you remember. But $3 lower. Now you talk about Iowa and Nebraska. They had some trade, but we haven't seen the bulk of the trade in the Northern Plains yet. But fairly significant trade confirmed in Iowa, over 2,000 head, and their live price was 122. That was $2 lower. But if you look at the spot futures market, we're sitting at 112.27 on Tuesday's close. It wasn't nearly that good earlier in the day on Tuesday, but it did come back a little bit, and some of that was helped spurred along by people getting out of some of those. But with your cash price at 122 and your futures around 112, that's a $10 basis. Basically, you can add that onto their sale price of 122, because with their short the board, that means they're going to be able to pick up that extra money. You tack that $10 on 122, you're suddenly at 132. We never got that for cattle. Even during the peak of the earlier spring there, we never got that. We sold some at 130, even a few confinement clean loads at 131. We never got 132. But essentially they did get some of that if you include their basis on Tuesday. Nebraska sold some cattle at 122. Your dressed price in the Northern Plains was 195 to 196, and that's mostly $5 lower, because you remember the bulk of the dress trade traded fairly early last week at $2 flat. So that's mostly $5 lower, guys. And just a sick market. But you have some of these hedged up feedlots, and everybody's pretty much hedged up before. I talked in a previous visit about if you go in and look at some of the reports that come out of CFTC, you can pretty much estimate that around 75% of the cattle are hedged. I would say it's probably more than that. Everybody's got a hedge anymore because everybody else is. So if you're not hedging that, you get left out in the cold. How would you like to be trading on a sharply lower market on Tuesday when you got all these basis jumpers jumping off? It'd be the most frustrating thing in the world. And when you're dealing with your risk management, if you're long the cash market, then that gives you a lot of opportunities to have different management risk schemes and maybe a lot of different other commodities. And sometimes that's your best opportunity to make a profit, is in your risk management when you're long the cash market. And a lot of your cattle feeders will say that. On the surface, feeding cattle is a piss poor investment. It's one of the worst. If you look back over time, the amount of years that it was profitable just pales in comparison to the amount of years that it was a terrible loss. But when you're long the cash market, you use smart risk management, and you've got some commodity brokers that know what they're doing that can help you out, then it gives you a lot better options to at least come out with a wash, if not make some money on most of your investments there. But look at the box beef cutout values. They took a dive on Tuesday. So that's another reason it was hard to trade. Choice cuts Tuesday afternoon closed at $223.87, down $3.13. Wow, that's a hunk in one day. And select cuts $211.83, down $2.15. And moderate to heavy offerings, they are moving the product at that, albeit at a lower price. 168 loads just on Tuesday, and that's pretty good movement there. Did note that your Beyond Beef stock price was up again, now up over 300% since the IPO last Thursday, so in less than a week, up over 300%. Pretty good performance for them. But let's talk about some of your feeder cattle markets. Your real-time index on Cattle Market Central on Tuesday evening, 137.40, down $1.21 from late Monday. And I tell you what, there's still not a lot of big sales to go, and it's just headed that way. We are going to have several cattle here in the next few weeks in the Southern Plains as they move these graze out cattle off. So you'll have some big strings coming through there. But just not a lot of cattle moving right now, and most of your sellers are scared of the market, so they're not in a big hurry to sell either. But look at one market that had a decent sale. Ozarks Regional Stockyards, West Plains, Missouri, 2,300 head there. The steer calves were kind of uneven. They had some local demand from backgrounders there, and in some spots there were some steer calves that sold as much as $3 higher, but others not as attractive to turn out, maybe $3 lower, and that's kind of the way that deal was. Your heifer calves $2 to $6 lower. Dan Hill, market reporter, friend of mine there, he did have a good commentary on there, and he noted that early in the sale, and they start pretty early there, 8 or 9 o'clock, it was sharply lower. The sale opened sharply lower. But guys were looking at the board, and they were getting a little bit encouraged there, and maybe some phone calls come in with some orders. But he said some of the top prices were paid right at the end of the sale, and that's unusual for West Plains. Normally the guys get right in there early, and then they start topping their loads off, but not hitting the top prices late in the day. But that just goes to show you how everybody just lives and dies by this board. I've said it 1,000 times. Your futures are not the market. Your futures prices are not the market. The cash market is the market. But everybody gets so tied up in the futures that they just let it dictate everything, and a lot of it has to do with what I was explaining before, where everybody lives and dies off that basis. The best test of the market was at Winter Livestock in La Junta, Colorado. They had several nice consignments there. This quote's not going to knock your hat off, but that's what the market is. 178 head of steers in La Junta weighed 821 pounds at 134.35. That's the market. You go way out west, they've got grazing out there too. Think of all the moisture they've had out in California. Turlock Livestock Auction Yard in Turlock, California. 90 head of 635 pound stocker steers bring 160-260. And then a market we've never talked about before, Humiston Livestock Exchange, having sales again there. 50 head of 710 pound steers bring $160. And that's your feeder flash for Wednesday.